Welcome everyone to our webinar today. I'm Lika and I'm delighted to host this live event for Beam Global. Our topic today is expanding globally with a partner-first strategy. Thank you everyone for joining us. Throughout this webinar, you will gain a valuable insights to revolutionize your global expansion strategy with your B2B software SaaS solution. We have very excited presentations lined up, but before we proceed, I want to mention that we will be hosting raffles during the event with a valuable gifts to you. Before I introduce to our speakers, I'm very curious to know from which part of the world our attendees are joining us. So if you can write in the chat tab so we can get familiar from which countries are you coming from and or joining us today. I'm very curious to see. Also, I remind you that in a Q&A section, you can write your questions during the whole event. So our speakers will be answering them. Okay, let's see. We have Jay McBain from USA. Obviously, we have Ori from Israel. We have a lot of registrations from Israel. What I see from my end, we have a lot of from actually Colombia, even South Africa. We are covering quite the globe today. We are getting a lot of questions also in a Q&A session, which is very nice. We are very excited to read them later on. While the presenters are giving the presentations, they will be also answering the questions. So now I would like to introduce Ori Ainy, the founder of Beam Global, who helps B2B software and startup companies penetrate the global markets and compete successfully with the global corporations. Ori also will present today's agenda. So how are you, Ori?
From so many countries and continents joining us, really exciting. Happy to see that all. So let me pull up my presentation. So here's an interesting fact. More than 70% of the market for IT and software is procured through channel partners. I mean, 4 out of 5 CEOs that I talk to are interested to expand globally with channel partners. But I would say that more than 70% of them are struggling their way to work with partners. They either have issues of recruiting the right partners or in the level of engagement, and they're not very, I would say, successful increasing the global reach through channel partners. So we are here to close this gap. So again, my name is Ori Ainy. I'm the founder of Beam Global. We help B2B software and SaaS companies and startups penetrating to global markets. So we help by this to achieve this by conducting market research, marketing strategy, putting together marketing plans, recruiting and managing network of channel partners, and other sales and marketing activities related to your global expansion. And we run these meetups or webinars to help you with this mission to become global. And our mission today is to help you understand and adopt a channel-first approach in your seek for global expansion. So we are here to discover the ecosystem of and understand the partner segmentation vectors and explore the roles of each partner type across the customer journey, and learn what is this new multiplier language for effective communication with your partners. For this big challenge, we need a top expert in the field, and we are very happy to have with us Jay McBain. He's the Chief Analyst for Channels, Partnerships, and Ecosystems at Canalys. He's one of the most visible and respected thought leaders in the global channel ecosystem. He's been named as the channel influencer in the Channel Partners magazines, and is top listed as a thought leader in other magazines. And he's often sought for his advice and guidance and the future trends on the channels domain. And if I can add, Jay is the guy that knows the numbers. So we can talk a lot about partnership, but he really knows what is going through the channels. So it will be exciting to have him with us. Just to mention that Canalys is the world's leading research firm with a particular focus on partnerships and ecosystems. So this is exactly what we need. And together with Jay, we're here to provide you with actionable advice in this changing ecosystem and arm you with the insights that you need when you want to scale your global business with channel partners, including how to avoid mistakes that can cost you a lot of money and time. So just to briefly see our agenda, this is how it looks like. We'll start with Jay's major presentation, expanding globally with a partner-first strategy. This will be followed by amazing draws. I will elaborate about it in a moment. And followed by my presentation about the 7 channel partners management mistakes that I have identified and I will be sharing with you, and I think that are harming your global expansion efforts. I will wrap up with a Q&A session and also more raffles for a very nice stuff. And about our raffles, so other than 2 Amazon gift cards valued at $50, we will be drafting 2 accounts for UberFox. UberFox is a LinkedIn outreach automation campaign. So we'll be drafting here 3 months, 2 accounts for 3 months each. No payment, no commitment for entire 3 months. You can run new campaigns. After that, you can decide whether you want to extend or not. There's no obligation on your side. And finally, we'll also have to have one. We're going to have one SendBuzz draft. Yeah, and SendBuzz is an AI marketing automation platform to build funnels, generate leads, and engage on email, text, and calls. So here the package is at 1 account for 3 months, valued at $591. You can fully run campaigns with no commitment, no payment. That's the way it works. So we're here to both learn and earn. Before we start, I'd like to ask you 2 questions. Lika, can you pull up our 2 poll questions? We'd like to ask you to see where you are in your journeys with partners, with channel partners. So we want to ask you first, how many active channel partners do you currently have? And secondly, what is your biggest challenge with the channel partners? Is your challenge with locating new partners, negotiating and signing agreements, or the daily management struggling with the partners in order to start seeing some traction and some sales? So you're welcome to answer. I see that many of you do not have yet channel partners, so you'll be able to launch your program in a proper way. Some of you have few partners, maybe you're struggling to locating more partners, and others are already in more advanced level of that have several partners, but probably face difficulties with the way to manage them. But yes, so the major challenges as I see it is locating new partners. We all want to have as many partners as we want, but also how to keep them engaged. So really struggle. So you see that you're not alone in this journey. We are here to help you as much as we can. So I think we can end the poll, right?
Yes. Now we are sharing the results.
Yeah. Yeah. Okay. So that's interesting to see. We can move forward. So without any further ado, I will hand over the stage to Jay. Your partner world. What is this partner first strategy approach? It's yours.
Thank you. Thank you so much for the nice introduction. Hopefully you can see my screen. And I'm here to share, as Ori mentioned, some numbers as well as some guidance around the world in terms of not only the world economy, but the technology industry and security and other things as well. So we'll kind of do a deep dive today on a number of things, as well as some trends looking forward for the next year, next couple of years, in terms of where we see this shaping up. So the world economy, normally don't share at this level, but you know, last year was $105 trillion. This year, the world economy is expected to grow by 3%. You can actually see Israel over on the right at $500 billion in GDP. But in terms of looking where the markets are in the 193 countries that you can sell your product in today and the relative strength, the one thing that jumps out in the world economy is that 75% of it flows indirectly. So across your personal and professional lives, your last new car came from a dealer. You bought your last television set from a retailer. You bought your last loaf of bread from a grocer. Almost everything in your life, kind of moves indirectly through third parties in all 27 industries. If we double click in the technology industry, this year we're going to approach $5 trillion. So it's 4.94 trillion to be exact. This industry is growing at 6%. So that is double the growth of the world economy. So it's the right place to be. And when you kind of look at the entire chart of 5 trillion, a couple things jump out, especially for those considering partnerships. And it was good that we did the poll at the beginning because I get a really good sense of the audience. But for every dollar of software, for every dollar of hardware that's sold today, there's $2 of services. Almost across the board, in every single category, services are outgrowing products, hardware and software products. So in the opportunities for partners around your product, that business is growing faster than yours. So this is where a large set of partners, which I'll share a little bit later on, are looking at this market, looking at the growth rates, looking at the places that they want to be, and looking inside, obviously, an industry that's outgrowing or doubling the size of the global type of growth in the market. The interesting thing is when we ask partners themselves, and we went out and asked a big group of partners around the world what they feel about 2024, and there's a big degree of optimism. And given the headwinds that I'll talk about in a second, they are pretty optimistic in terms of growing by double digits or growing overall. 2/3 of them are growing and outpacing even the technology industry growth. And surprisingly, they think they're going to do it more profitably than last year. So not only are they outgrowing the world, they're outgrowing the technology market, but they think they're going to drive more profit doing that. So there's a historical context to this, that we've had pretty good times globally for about 15 years. Since 2008 was the major last downturn in the economy. The technology industry took the world out of recession, and partners were the optimistic crew that were the tip of the spear that did that. If you go backwards from there, 2001 was the previous major meltdown. And again, the technology industry took the world out of recession, and partners were the leading optimism of that. So it's happening again, and there's historical context in terms of what we see. But we know the world isn't the same as it was last year. It wasn't definitely the same, as it was a couple of years ago. We're dealing internationally with a lot of things. We're end customers are dealing with higher inflation and interest rates, kind of that end of the free money. We're feeling it as well as we build our companies and raising money that obviously capital markets are challenged. We have obviously have two major conflicts, one in Israel and one in the Ukraine. It's causing other supply chain issues and a little bit of turmoil in terms of world markets. We also have an interesting year. It's the biggest election year in world history. Half the world's population in over 50 countries, including the United States, where I am, are going to the polls later this year. The challenge is that this isn't a normal election. There are people running across these 50 countries that are questioning things like the World Bank. They're questioning things like NATO. They're questioning big, big things that we've had pretty consistent for 50 to 100 years. And so this could be consequential. And this is obviously putting a damper on some customer demand because of it. We continue to set records on climate change, but for us, when we look at the results of that, it becomes challenging in terms of supporting our customers. wherever they are in the world and whatever they're facing. We have continued energy challenges, which if you look at generative AI and you look at the kind of the world of cloud and stuff, you've got electricity issues, you've got fresh water issues happening. Places in Latin America, they're shutting down fresh water to cloud data centers because the citizens don't have enough fresh water to drink. And then for the first time, cybersecurity has hit the top 5. So if you went to Davos, you're one of the rich people who flew in on their private jets. This was one of the 5 top world issues now, combined with the other ones. It's actually got to the top of the political sphere as well as the world of power. So cybersecurity behind that is a growing industry. When I said the world is growing at 3, the technology industry is growing at 6. This industry is growing double that. It's one of the few technology areas that are growing in double digits. And as you can see, pretty consistently around the world. Obviously strength in Latin America, but there's no weakness. It's growing in solid double digits. And again, when I said that hardware and software, which make up $87 billion in cybersecurity, are growing close to 10%, the services are growing at close to 13. So here's a good example again, where services are outgrowing products. And by the way, services drive $2 for every dollar of product. And with this growth, and over the next 5 years or so, it'll probably be 3 to 1 in terms of what partners can make wrapped around security. So if we double click on security a little bit more, if I take the 87 billion up top, you can see if you're in kind of a zero trust or a SaaS type of framework, all the different growth engines within the $87 billion number driving that double-digit growth. But you can see a double click below, and this is the first time this has ever been put together at this level of granularity. This slide is probably only a week or 2 old, but it shows in that growth of the services, the 163 billion, where it's landing. How much of that is consulting versus design and architecture, implementation, integration. But you'll see half of it is managed services. And for the first time, we've double clicked on managed services and shown growth rates, comparing MDR, for example, to SIM, comparing remediation now at 145% growth. We're seeing where managed service providers are seeing big growth. And by the way, managed services is now a $548 billion global business, over $500 billion. Over 1 out of every $10 that businesses and governments spend globally is now on a managed contract. And there's now 335,000 companies out there with at least 1 managed contract. This is a massive audience. And by the way, if you compare that to the old days, the Microsoft, Cisco, Compaq channel of the 80s, IBM channel of the 80s, about 400 and some thousand partners were selling PCs and still do. Almost 3/4 of them now have at least 1 managed contract. So that's where the world's heading in terms of how they can make money outside of resell. And this theme's going to come up. And then we obviously stare at all the companies that are driving at the biggest level. So what's interesting is that this is the year of the platform, which I'm going to talk about. And today we have 6,500 security vendors, many of them in Israel. But we're starting to look at this market, not as 6,500 unique tool makers, but start to evolve and mature to look more like other software markets. For example, in SaaS, you have major platforms like Salesforce, ServiceNow, Workday, Marketo, NetSuite, HubSpot, that really own that customer choice. So I'll use marketing as an example. A CMO will land with Eloqua, Marketo, HubSpot, Pardot as the 4 major platforms. And then there's 13,080 ISVs in the MarTech and AdTech stack. But they don't just go and randomly select 13,000 different companies to build a 7-layer stack. They start with one of the majors, like a HubSpot or a Marketo, and they build on top of it. So in security, you're going to start to see that. Why Cisco acquired Splunk, closed last week. Why Microsoft has been making such big moves. If you watch Palo Alto for the last couple of months, all they talk about is platforms. Every single release is talking about platforms. And so, you have CrowdStrike, Zscaler, and Okta that created a partnership. So already there you have 4 major platforms competing for 4 or 5 slots. And in the end, whether we have 5 or whether we have 4, the fact of the matter is this market's going to solidify around a platform and then 6 layers above that platform to achieve zero trust or SASE for an enterprise, or to achieve the right kind of defense and the right kind of protection for a small and medium business. So this is a major change for the first time in 40 years in the security industry. So I want to kind of go away from the numbers, which is hard for an analyst to do, and get into kind of what are the major things happening this year. And we're going to talk about global expansion around these themes. Because every time you're expanding, every time you're trying to introduce yourself to a new partner, introduce yourself to a new customer, there's always has to be an inflection point. What's changed? Why do I need you today versus, not needing you yesterday? Why does this make a difference to me looking forward as opposed to something maybe I've missed in the past? So these are the inflection points that you can successfully grab on top of and go and expand markets. And whether you want to move into the United States, whether you want to move into Western Europe or into Asia Pac or Latin America, this is what's happening. One is that the buyer, for the first time in a generation, is changing. So the majority buyer of security today, the 87 billion, is a millennial. By the end of the year, born after 1982, obviously comes with a different psychology, different buying behavior, different journey that they're on. And we could spend the entire session talking about what a younger buyer is and how they work differently, but it's an inflection point. These buyers are digital first or digital only. 75% of them on a recent Gartner survey don't even want to talk to a human. They want to go and buy a car without ever visiting a dealership. They want to go and buy $1 million worth of security without ever going through a sales demo and talking to a human. So how does that happen? And how do they become subscription and consumption friendly? They grew up with Netflix and Spotify. They're okay paying $1 a month for a toothbrush or a razor for the rest of their lives. They're also integration first. This is a new thing. In criteria in the past, in security, for example, criteria like service, support, capabilities, brand reputation, obviously price, are always there on RFPs. They're always there in the customer mind. But number one now in criteria is it's got to work better in my system, in my stack, in my organization, my operation. So this is a buyer now that will tell you, I'll buy a product 80% as good as the next one if it works better in my environment. So it has to have open APIs. It has to connect up and down through the stack. It has to work in this platform model. You've got to contribute to the telemetry. You've got to contribute to the data lake. This is a team sport, and I'm ready to integrate up and down the stack. And that's my number one criteria. By the way, I don't buy a single solution. When I say platform, I don't just mean a product with a bunch of features inside of it. I don't mean security with network and data and edge, email, cloud, clicking off observability. It's not just one platform. It's 7 layers of a stack that brings it home. Brings it home to my industry, brings it home to my buyer type, brings it home to my segment that I'm in, brings it home to my country, the compliance and governance I have to live under, brings it home to the business model I want to buy in, the product sets I want to buy. This is a 7-layer stack. And another big change is they also see partnering as a team sport. So for those of you that said you have no partners, or you have 1 to 5 partners, which is 80% of you, this is a team sport of surround strategy. The average buyer today now has 7 partners they trust around them. And they're not the 7 same partners. They're not 7 resellers that are competing, or 7 managed service providers. There's 7 people that are really smart about their business, about the role in the business, about their industry they're in, about the geography they're in, or the segment. All these things are important to build a team. If you're not surrounding a customer today, your chances of winning are very, very low. And I'll just use the biggest company in the world as an example. Microsoft just overtook Apple as the most valuable company in the world. And you look at it and you look at Azure versus AWS, it's not a better product. Actually, AWS had a head start and AWS has more product features. It's not a better price. It's not better promotion. They didn't run a better Super Bowl ad here in the United States or World Cup or Formula One sponsorships. It's about place. Microsoft has more of the 7 partners that wrap around every buyer than AWS does. And Microsoft has outgrown AWS for 19 straight quarters. The only differentiator they have is more of these 7 trusted partners talk about Microsoft than they do about AWS or Google or anything else. And that's a big $3 trillion example, but I could use very small security companies that are doing very, very well and growing by triple digits that are using the surround strategy successfully. You know, one all-star over the last 3 to 5 years has been CrowdStrike. And they've entered every market in the grassroots, bottoms up, and they've, you know, hired local teams, local language, local culture, and they haven't run the big TV ads and everything else. They've grown from the grassroots up. And now they're an $80 billion company, you know, 5 years later. That's a big security example, but again, there's examples all the way across the board in front of this new buyer. But suffice it to say that when Apple got up last year and said that 79% of people won't buy a car unless it has CarPlay, I believe they meant Android Auto as well. They didn't mention it. But the fact of the matter is, can you imagine being in this industry, a $4 trillion car industry, where you're taking over a dealership from your great-grandparents from 100 years ago, and you're just about to lose 4/5 of your buyer because you don't have a tech integration? This is what integration first means. And then when you start asking the 63 car companies how they're responding to this new buyer, well, window to window to windshield, Porsche driving experience is now 100% served by Apple or Google. Apple owns your speedometer and your climate control. You want to go buy an Aston Martin? I could show all 63 companies. Window to windshield, now served by big tech. This is the change that's happening. Now you got to think about your company. Think about an integration first buyer. And are you serving them the same experience, digital first experience, that others? So let's talk about platforms. So platforms almost in every market, I mentioned Microsoft, AWS, and Google, own that $250 billion infrastructure market. Buyer by buyer, you know, Salesforce owns the sales buyer. I mentioned the 4 companies that own the marketing buyer. ServiceNow, you know, the CX buyer. Workday, HR buyer. NetSuite, finance buyer. Each buyer has a platform or a set of platforms. It's not just NetSuite for the CFO. If it's a smaller company, it might be QuickBooks. A little bit bigger, it might be Sage. You know, much bigger, you know, it could get into Dynamics. But very, very large, it gets into SAP and Oracle. They have a platform, and they have platforms to choose from competitively. So we went, and I actually partnered with HubSpot, which is one of the biggest platforms in the world, and I think most successful platforms, to look at the 50 best platforms in the world outside of security. And what did Salesforce do to become a $35 billion revenue company? Becoming bigger than SAP, getting bigger than Oracle in valuation. How did they do that? How did all these companies do that? How did they deliver this business model? The people, the processes, the programs, the partnerships, and that's what it is. It's partnerships. Every single largest company in the world, if you just download the global Fortune 500, the top 10, top 20, top 30 are all platform companies. We were confused when we used to say that every company in the world in every industry is becoming a tech company. They're not becoming tech companies. Like a pharmaceutical company is not going to become a tech company. A car company, not exactly a tech company. A bank or insurance company still has to be in financial and fintech products. They want to become platforms. They don't want to become tech companies. They want to become platforms. And becoming a platform has a big tech digital front end. It's got a digital marketplace, and it's got everything to serve that buyer. And there could be 5,000 fintech tools on top of that, which is great, but they all integrate into the platform. This is the new world. So when your business runs on subscription or consumption, usage or value-based product-led growth, it doesn't matter the business model. The fact is it's geared into the bottom right, which is marketplaces and this new platform economy. We have all these business models that we're all trying out, and some of them are more successful than others. But we either have to become a platform or we have to participate in other platforms and their ecosystems around them. This is pretty much the only way to be successful today in technology. You can't run it alone. You can't be an island. You can't just go and run up against all these bigger systems. You got to be involved, and you've got to be in front of this integration first buyer. So the level that we're seeing as analysts is everybody knows their target addressable market. You know, how many billions of dollars are in your product category. But CEOs now need to walk around, and the board needs to know what the service available and service obtainable markets are. This is used to be the dealerships or the resellers or the franchisees. This is where the cash registers are, not anymore. The serviceable available market is where you influence the 7 partners that wrap around every one of your customers. That's who you can acquire. Obviously, you have to have product, feature, function, but your go-to-market and your routes to market has to be partner first, or you're not going to break in direct in front of these new buyers. Service obtainable market, the percentage of SAM. So now what's realistic is looking, again, buyer by buyer, industry by industry, country by country, and what's that smaller number, and how do I make those larger? It's a partnership strategy. But I don't want to get too far. You don't start a partnership strategy other than tech integrations from day one. From day one of your company, you should be working on tech integrations with things in the 7-layer stack in front of your customer. But working on getting resellers or getting system integrators or getting other partners should be a little bit later on after you have product fit. You're going to start your company direct. You have to find a sales and marketing model that works, that's repeatable. And I know Beam Global can help a lot with that. You have to find a product that fits, that's sticky, that customers renew and they're excited about. But once you get those things, it's not unlike selling donuts or coffee. At some point, you need a restaurant on every street corner of every town in the world. And that's this expansion model with partnerships. And again, it's not cash registers. How money changes hands in the future is the next big topic here. It doesn't matter who collects the money. You could collect it direct. You could have Larry in the white van collect it indirectly. You could have it go through a marketplace. Doesn't matter. The fact of the matter is that customer still has 7 partners wrapped around them. And that's the new TAM, SAM, and SOM story. I mentioned getting expertise around that customer in terms of all these things that are important to them. There's no horizontal partner that just knows everything. Even though Accenture has 750,000 people, they can't cover 334 million companies in the world at this level of granularity. So what you end up having is millions of partners, potentially. So if I'm in cybersecurity, I keep going back there, but if I'm in cybersecurity, today there's 1 million companies, 1 million around the world that are talking cybersecurity. If you want to enter the United States, there's 163,000 of them. They're not all resellers. They're not all managed service providers. They come from industry-based groups that are coming into tech. For example, marketing agencies, 78% of them are now tech services companies because they serve a CMO who in many cases spends more money on tech now than the CIO. I talked about the financial accountants and CPA firms. 81% of them are now tech services firms. Everyone is competing. You've got hundreds of thousands of software companies now. You've got 800,000 emerging tech companies, IoT, AI, automation, blockchain, quantum, metaverse, 3D printers, doesn't matter. You've got global system integrators, regional system integrators, hundreds of thousands of cloud consultants. You've got a big group of companies here, millions of them, competing for 7 trusted spots around your customer. So how you go to market and how you think about those 7 people has to be somewhat expansive. And I'm going to tell in a minute, because that was the second question on the poll. How do we find more partners and how do we get them more engaged? I will say before I leave this topic, marketplaces are growing at 86% compounded. They're almost doubling every other year. We had made a prediction that in the world of distribution, that AWS would grow and be part of the top 10 by 2025. That's joining the likes of TD SYNNEX, which is 60 billion, and Ingram, which is 50 billion. Well, they didn't do it. They did it by the end of 2023. So they beat our prediction by over a year in terms of growth. If you happen to be in cybersecurity, 3 companies now have issued press releases, including CrowdStrike, Palo Alto, and Splunk, that they're running $1 billion business now on AWS Marketplace alone, not including Microsoft, not including all the others. This is how fast it's growing. And the world of marketplaces, which is becoming one of the key routes to market for security and everything else, is now not just the big cloud marketplaces, the big SaaS companies, and obviously the hyperscalers. It's the big distributors. There's 500 distributors around the world, and about 50 of them are putting serious billions of dollars into digital marketplace. The fastest growing company on this entire slide is Pax8. They're throwing hundreds of millions of dollars into this cloud distribution. They don't distribute hardware, just software. But other companies around the world, there's about 100 of the cloud distributors that are growing very, very fast in security. You look at the telco world, tech solutions distributors, mostly a North American phenomenon, but 25 of them consolidated down to 4 or 5, the platform approach again, but they're coming into security fast. All the biggest resellers in the world, and there's thousands of them, are investing in their own systems of digital. I mentioned managed services is over $500 billion. There's 335,000 companies who run their entire company on ConnectWise, Kaseya, Datto, Enable. You're not going to be successful in the United States or Canada without integrating with these logos here, without getting into their communities, without getting into the conversation. This is where a lot of the riches. By the way, 2 of the first companies here on managed service exited to private equity as billionaires using a community approach. Very big market that's not well understood. And then marketplace development platforms. There's 150 of them, and they're doing the white labeled marketplaces. So this is kind of the new go-to-market routes to market. But I know that Ori kind of started off talking about multipliers. When I said that the money changing hands doesn't matter, it really doesn't matter. The actual transactional movement of money is about the least valuable thing that partners do. And what's interesting, just on that note, is all the 3 big marketplaces have reduced their fees to 3%. They basically told every one of your potential customers that the value of resale is 3, the same 3% that running your personal credit card at a restaurant is. So what they may have thought in the 80s, it was 40%. We may have thought in the 90s, it was 30%. The fact is it's 3. So what partners have to do is outside of that 3%, whether it goes through a marketplace, direct is going to cost you SG&A 3% of movement of money and other things, and indirect. All of them are going to cost, let's say, 3% for the cost of moving money. And that's, by the way, the actual cost of tools to do that, the currency and movement of money, the taxation, everything else that comes with it. Second is the risk that the customer is not going to pay. Third is the time value of money, having to wait net 30, net 60, net 90. And then fourth is the cost of hiring BIF to break knees when they don't pay. That entire thing is now worth 3%. And that's why I'm saying it doesn't matter as much. If you look at the biggest platforms in the world, the biggest companies, they've moved away from that language. It's not a partner program that has gold, silver, bronze. It's really a partner program that talks about the multiplier, the chance to make $6.19 for every dollar of Salesforce, the chance to make $5.80 for every dollar of HubSpot, the chance to make it Google Cloud, the chance to unlock trillions with Microsoft, which is $7.63 on every one of their dollars, the chance to make $6.40 for every dollar of AWS. So we're actually the firm that puts all this together, and we get very detailed. Outside of that procurement gray circle, what are all the other hundreds of services that partners could be potentially doing for you? From the very early moments in green, 28 moments before a customer buys, doing the marketing, they're doing the consult, they're doing the design and architecture. They're doing all the work, the configuration, pricing, quoting. They're doing all the work to get a customer to buy. So if you're not using partners, you're missing out on most, if not all, of the customer's first 28 moments. The chances that they just magically find your product on a Google search at the point of procurement is very, very low. So this is why product-led growth and other kind of models are evolving to include ecosystem-led growth. Obviously, at the point of procurement, there's 7 other things that are bought and a bunch of deployment, implementation, integration that kicks off of that. I mentioned how large managed services, 1 out of every $10 now spent is managed. This is kind of the new journey. And that procurement circle on the right is only 3%. So if I look at AWS as an example, I can go to a partner and say, selling AWS, it could be 3%. In here, it's 5%. But whatever it is, it's a very small part of your opportunity. Instead of talking about making 3 or 5% of the deal, let's talk about making 200 or 300% of the deal. The customer is going to consume $100,000. Well, in that, they're going to manage that environment $1 per dollar. So take the $100,000 divided by 36, and that's how much you can charge in managed services on every dollar of AWS. You do the consulting and the design work, it's another $2 there. You do some other custom development work and software work, it's $1.50 there. You do some implementation work, it's $1 there. So you can make up to $6. No customer outsources all of it. But you could realistically make $2 to $3 for every dollar that AWS makes, or every dollar that Salesforce makes, or every dollar that CrowdStrike makes. This is platform economics. And why would you ever stick around for 3 or 5% when you could be making 200 or 300% at 75% margins? This is why the economics of partnering are changing fast. And so we've always tried it to the point of sale. Gold, silver, bronze programs, front, back end margins. It's not good because some partners do everything, marketing, selling, engineering. You win deals in your sleep. Other partners just show up at the point of sale and collect the money and they're gone. I'd rather measure them in a different way. And instead of the old 40-year method of just paying them when the money changes hands, what if I could pay them for those first 28 moments, or at least recognize them? What if I could pay them for every 30 days forever in a subscription model? What if I could pay those technology alliances, strategic and business alliances? And I don't mean pay money. I mean pay recognition and observe the value of that. And so I'm managing an ecosystem of channel companies, over 200 of them, several of them in Israel, that are building technology to better let vendors do this. If I can measure all this value partners have, help recruit, help engage them and enable them, it's not just putting out portals anymore, or putting out a gold, silver, bronze program. It's getting more complex to be able to do that. 2 other trends, I only have a couple more minutes. So a couple other trends, and why would I have the Cookie Monster on a slide? It's taken 30 years to get Cookie Monster. But 2024 is officially the end of the cookie. So what does that mean to us? Well, Apple, a few years ago, they have no skin in the game because they don't sell private data. When we're the products on the internet, they're not out selling our data as part of their business, but a company that does is Google. Half of Google relies on our private data and selling it to the highest bidder. Facebook and Cambridge Analytica, these companies were trillion-dollar companies were created by selling our personal data. If we mentioned, in front of Alexa that we're going to buy a car, 2 minutes later on Facebook, you see a car ad. That's big, big business. And now Google, a couple of weeks ago, started updating Chrome, taking away cookies. By the end of the year, they've committed to the end of the cookie. 99% mobile share is owned by these 2 companies, and 86% desktop browsing share. We all around the world get to the internet, minus China. We all get to the world through 2 companies. When they remove us being the products on the internet, the world changes. So if we look at the 28 moments again, which the average buyer goes through, whether you're buying a car, whether you're buying software, any considered purchase. Some people spend 50 moments, some people drive straight to a dealership, but the average person, and now a millennial, spends 28 measurable moments. Who do you think, when 81% of them search on Google or do a ChatGPT or Gemini search, who do you think comes up? It's local business. It's, people within 5 miles. So somebody who wrote an ebook, white paper, recorded a podcast, those very early moments where you could have bought it before through MarTech and ad tech tools and go and buy those early sentiment, buyer intent signals, can't buy them anymore. The only way you get to a customer today in the early moments are getting to the partners that are surrounding them, part of those 7 partners, and walking them through all the way. By about midstream, they're ready to get more serious. They're getting into, like, if you're buying a car, you're configuring the car, got through the 365 kinds of car, and you got the ones that, configured. Before you hit the dealership, you're going to download the invoice price they're paying for the car. You're going to download this month's back-end rebates. I mean, you're so smart by the time you hit the dealership. That's why 75% of people don't want to hit the dealership anymore. It's a total waste of time. Same thing with buying software. I'm so smart by the time I'm going to pull the trigger that I don't really need the old sales demo the way I did in the past. I've already trusted my 7 people. I've already built my 7-layer stack. I'm ready to go to a marketplace and click buy in this new world. So this one slide answers the poll question. How the heck do you do this? How do you recruit partners and how do you engage them? It's the favorite part of my research. Around the world, there's about 10 million people in the channel in the vendor community, and there's about 10 million people that work for partners. So 20 million people last March had to go and get smart about generative AI, all in one time, last March. Well, 20 million people went to 1,000 places total. 12% of us love podcasts. They went to listen to 130 different podcasts. There's 270 events for the channel around the world, more than one every day. They maybe went to one of the 106 channel magazines. Some of them you see in behind the scenes here. They may be attached to one of the biggest associations. CompTIA is the world's largest. They're maybe in a peer group. They could rely on some of the bigger channel consultants, some of those in Israel. The fact of the matter is there's 1,000 watering holes total. That's it. End stop. If you want to get to 20 million people, there's 1,000 places and about 100 people. Super connectors. In the US, we call it the Kim Kardashian strategy. People that know everybody, that people that are on the front covers of these magazines, people that are on the top 100 lists, that sit on the board of these associations. They're doing the big keynotes in Las Vegas in front of, last week, 10,000 people at CP Expo, getting on stage in front of 10,000 people. These are the super connectors that if they knew about your product, they could help guide you, but they could help influence partners at the point of influence. This is the new world here. And almost every company, 99% of the companies I talk to, get this part of it wrong. They think they have to fly into the United States, meet in Chicago with CDW, go to Tampa to meet with TD Cynics. They're thinking top down, but you can't afford those conversations. When I was at IBM and Lenovo, I paid them $1 million a month in MDF. That's who they listen to. They're not going to, back up a small little security company who thinks they've built a little, better mousetrap because there's 6,500 people knocking on their door. You got to go immerse yourself from the bottom up, community level up. And that's how to win. This is how you recruit. This is where the 335,000 MSPs are. This is how to engage with them, not in your own community, not on your own portal, but go to the places they already trust and the people they already trust and speak through the places that's already there. All of these, by the way, if you go to my personal LinkedIn or my newsletter on LinkedIn, these are all published. All these numbers, if you want all these lists, they're there. You don't have to go find these numbers. All the data's free. It's just, what do I do? I'm not going to go to 270 events. Which 20 do I have to get to? And then finally, with the last minute, Gen AI is big, but it's not the $4 trillion industry opportunity that we keep hearing. It's not these big, huge numbers that the hyperscalers are pushing. You know what it is it's a $15 billion services opportunity per channel, but it is growing at 59. You got security growing at double digits. You got managed services growing double digits. This is one of the fastest growth engines, but we're all pretty skeptical. And it's an internal opportunity first. Unlike other emerging tech, IoT didn't give us an internal opportunity to put up a beacon in our location. Metaverse, we weren't going to wear headsets to do business. This, you can rethink every part of your business. And partners are rethinking every part of their business. Sales, marketing, customer success, invoice billing, service tickets, everything can get better with generative AI today. It creates its own circle. But for partners, it's not the same. It's not just to go sell a bunch of stuff, because generative AI isn't a product, it's a feature. It'll be a feature in your products. So in the future, how you work with services partners and how they see the opportunity is going to be much different than the products we've had in the past. So hopefully I've made a case today. It's a big inflection point. You've got a new buyer, you got new economics, you got new platform economy taking shape in security and other markets. And you've got other things triggering, like the end of the cookie, all happening at once, all providing you the opportunity in a community, bottoms-up, grassroots model to go and be the next billionaire. Ori?
This presentation, understanding the complexity of this market and these ecosystems and these 7 layers models. It's quite amazing, even overwhelming, I would say. Yeah, super interesting. Probably we'll have a lot of questions over here. Lika, why don't you take us to some entertainment issues over here?
Yeah, with a pleasure. Actually, it's time for the promised draw. So we will have 3 raffle winners with 3 prizes. Our first draw includes an Amazon gift card worth of $50 and 2 UberFox LinkedIn outreach automation accounts. So after Jay's presentation, I can already tell you how important this UberFox LinkedIn outreach automation account can be, because UberFox is a smart tool that will automate your outreach on LinkedIn. You can also assign virtual assistant profiles on LinkedIn that will help you run outreach on behalf and help you set up meetings with a target audience. This is a pro account that gives you straight full access to automate your outreach and gain the real value. So for 3 months, you have the full access with this account, pro account. So let's start with an amazing Amazon gift card, and then we move to the UberFox. So the first winner will win the Amazon gift card, and second and third winner will win the UberFox. So I will be sharing right now the screen of our raffle. Just a second. And let's see who are the lucky winners. Okay. Here we go. Okay, we have a winner, Eyal Zubowski, who won the Amazon gift card of $50 value. We are moving now for the next winner. Baruch Muchbinder. I hope I'm pronouncing correctly. So we have the second winner, who is Baruch Muchbinder. Okay, so we have the third winner, who is Guy Shkolnik. Shkolnik, I'm not sure if it's a surname, because in Russian, Shkolnik means someone who goes to the school every single day and is never missing. So that's in Georgia, we use a lot Shkolnik, someone who never missed the school. So congratulations to our winners, and Ori, I will handle to you.
Sure. So, right, so we have our 3 winners, that's great. Now let's talk about the 7 channel partner mistakes on a very tactical level, I would say, that from my experience, I see that are harming your global expansion with channel partners. So, you know, software companies, B2B, SaaS companies, startups, they decide to work with channel partners based on the assumption that if they pay a reasonable commission, and based on the strong presence of these partners, that they will be able to gain a global expansion with these partnerships. but the reality is tougher, unfortunately, for all of us. And it's very difficult to navigate, and I think Jay explained it very clearly why, in this terrain of channel partners. It's really a big challenge, very promising one, but hard to decode. And many companies fall into pitfalls of which cost a lot of money and time, and moreover, a lot of frustration. So luckily, others have already committed these mistakes, and there's no need to repeat them. So we are here to help you steer clear from 7 of the most devastating and expensive mistakes related to channel partners management, and fast track your expedition towards a global expansion with partners. So the goal of this session will be to try and help you to avoid 5 of the 7 mistakes. On 2 of them, you will probably insist, and that's okay. Feel free to experience these mistakes, but we'll present the entire 7. And we'll try to arm you also with tips. So it's not only about what you shouldn't do, but also what you should do actively in order to be more successful with your channel partnership plans. So the first mistake that I've noted is that the approach of taking care of the domain of channel partners and leaving the strategy to a later stage. So, or I would say even worse. So dealing with channel partners, hoping that this will avoid the need to deal with a strategy, with a well-defined strategy. Okay, so here many entrepreneurs and companies, they try to bypass the issue of dealing with strategy, which is related to a market research, to conducting an objective analysis, having a written plan, and they try to go for a partner's approach, trying to be relieved from this hurdle of having to decode strategy, which is a hard task. Now, why is this a mistake? When we look at partners, it's part of a broader marketing mix, which is part of your strategy. A marketing mix is comprised of the place. Place is where the partners are. Could be the geography, or could be the places from where customers buy products. Retailers, supermarkets, distributors, MSPs, whatever. The product is the product or service, or scope of your offering. Pricing is quite obvious. And promotion, this would be like the, let's say, the marketing staff activities, the channels, and so on. So partnerships are part of this marketing mix. It's not a standalone decision. And the marketing mix is a part of a wider area of marketing analysis and strategy. So when we look and help companies in their go-to-market strategies, we run a full process where we look into the companies, analyze them, conduct a thorough market research, segmentation, geographies, buyer behaviors, personas, verticals, followed by a competition landscape analysis. What are your competitors doing? And then we are in a position to deal, after having collected enough information, with a strategy. Now, we're not going to cover the full strategy. This is not the aim of this webinar, but just to illustrate to you why strategy comes first. Within the strategy, you have to define the target customers. So imagine that you're selling your tech product to big retailers. There's no point in assigning MSP or a reseller or a distributor if their forte would be selling to higher education institutions, right? Because some of the companies that I work with, they're trying to locate like strong partners, but they don't check in advance whether they have a reach to their target customers. So target customers is part of your strategy. Your channels are not going to buy your products just for their own fun. They should resell it, add value, add their package, and offer it to their respective customers. Therefore, you first need to figure out who the right target customers are, and then accordingly select your partners. This is one example. The other one would be, this one would be like a tougher challenge, I would say, defining the USP, the unique selling propositions. So what you see here was what your customers want. This is what you can provide them with your product, your offering, and this is what your competitors do well. So you're looking for the sweet point over here the unique selling proposition, something that they want, you can provide, and your competitors will find difficulty in providing this area. And when working with partners, will not avoid you answering this question: what is your unique selling proposition? As a matter of fact, the more experienced partners will ask you that question, okay? And then when you choose partners, they need to fit into these unique selling propositions, but it's not a substitute of having to deal with this strategic issue. So again, channels, working with channels, are part of our overall strategy. So we see here the marketing mix. So for example, and each one, it's a very delicate equilibrium that you need to find between these components. You move one piece of the puzzle, it has an impact on the other ones. For example, pricing. If your pricing is very, very, very low, maybe you don't have the right margins to pay for the right partners. Or if your product is heavy on implementation, requires a lot of integration, customization, and so on, this means that you need a particular type of partners for a certain value that they can provide. So partnerships is not a standalone decision. You cannot, skip strategy just because you've selected to work with partners. So you will be doing a lot of tactics with partnerships, recruiting them, onboarding, negotiating, and so on. But this would be like the noise before the defeat. So my suggestion would be for you to put together a written strategy and a marketing plan, and then see exactly how the partners, should you choose to work with partners, or which type of partners, how do they fit into your strategy? That's the first one. Let's move to the next one. This is a very common assumption, that once that you signed an agreement, your job is done, okay? The licenses, the income is going to flow, and you don't have to do really much about it. This is, of course, a mistake, and while I acknowledge that signing an agreement is essential, and as a matter of fact, it's even worth like a mini celebration or a mini PR, but reality is that nothing is going to happen after you sign an agreement. So if you just count on signing agreements with partners, you can assume that 90% of them are not going to sell anything of your products. And why is that? Because typically when you sign an agreement, the partner places your products on their shelves. Shelves and products. There are many products, there are many services, they will place you over the shelves. If a customer approaches them and asks specifically or insists buying your product, they will certainly deliver it to them. But will they bring the customer to buy your product and to select and prefer your product over competitors? Not sure. And what's the reason? So if we look in a very schematic way about the, let's say, life cycle of a partnership, so we start typically with the planning phase, okay, when you define your ideal partner profile, you set the goals, you develop a partner program, on which we're going to elaborate later on. You put in place a certain infrastructure like a PRM, partner relationship management, and other assets that you need in order to support your partners. Then you can start with the recruitment process, where you look for prospective partners, you outreach to them, you try to qualify them, engage and sign, and then to the onboarding, when you need to train them, provide assets, provide guidance, and then managing them. But to be more realistic, it would look like this. So yes, you do the planning and the recruitment plan. The onboarding takes some time, and at a certain point you sign an agreement. But what you can see is that most of the work is still ahead. You've just started your journey, unfortunately for you. So you need to be able, during the onboarding and the managing phase, to educate them, to teach them, to guide them, to show them how they can make money, to share case studies, to share materials, price lists, conduct meetings with them and with their respective customers, visit them, calls, attend events, or motivate them to generate their own events, provide them rewards, hear their feedback, measure their performance. So there's still a lot of work after signing the agreement. So my tip for you would be that you need a channel management leader to run this relationship. It's a long-term relationship. It's an investment. You also need time and you need resources. It's not magic. Working on a relationship is a lot of work, particularly with partners, which are independent companies with their own interests, own agenda, own products, and then offering also many other products also of non-competing vendors. And you have to build a strong relationship, and therefore you need a channel management champion in your team. Let's move forward. The assumption that with channel partners, you can avoid marketing. I will assign a partner in Italy. These guys will bring leads. These guys know better marketing than I do, and they will do my job. I don't like so much to invest in marketing, okay? But again, reality is that your partners are not willing to undertake the same risks that you are. They're not willing to invest in your own brand as much as you are. You have to take it into account. Now, also keep in mind that they might be very technically oriented, but they're not always the best marketeers. You cannot excel in everything, okay? You are the one that should know how to market your products the best. You should be able to share tips with them, guidance. What worked well for you? Your LinkedIn campaign, your email outreach, going on exhibitions, or running webinars. If you haven't done it, how can you share experience with your partners? Okay, you need to make your products easy to sell and even share leads with them. I know that many of you expect the partners to generate leads for you. I also expect that, but your partners are also expecting you to generate leads for them. Most of them are expecting them, and the majority of them are not going to tell you that explicitly, but they're going to judge you on the level or your ability to generate leads. So what you need to do, you need to do marketing. So we saw the 4 pillars, or the 4 Ps. Marketing was there, which is the P, the promotion, right? You cannot avoid it. By working on channel partners, it doesn't mean that there's no need for marketing. You need to do end user marketing. By doing that, you will attract more channel partners because they will, in the ecosystem, they will hear about your products, they will be interested in, okay? You might also be doing some direct sales, which is a great plus, of course. And you also be willing to be able to attract the more experienced partners because they will evaluate you on the level of your investment in marketing. And if you're a partner that is worth working with, okay, how easy would it be to work with you? Will you be generating leads for them? So you need to do end customer marketing, and also a small portion of your marketing you have to dedicate to partners only marketing, I would say. That would be specific product updates, battle cards comparing your products with your competitors, newsletters dedicated to partners. You have to invest in specific partner marketing as well. But basically, you need to do marketing, end user marketing, what we call in this case, in order to attract more partners. You saw it in the poll, and the better partners, the experienced ones, because they're going to evaluate you, even they're not going to tell you about it, and they're going to look into your marketing machine. So why do you need partners? You do need partners for marketing. Partners are great for localizing your messages and getting your messages through to the local market. They are excellent partners for amplifying your marketer. The power of 2 is greater than 1, but this doesn't mean that you can stop doing marketing. So if you don't have plans, don't like to do marketing, don't count on a successful partnership initiatives. This is a painful issue. Jay actually implied on it. When launching, in particular, disruptive products or new concepts or innovative products, the assumption that you will rely solely on partners. And there is some common sense over here because you don't want to open a new office in Germany or in the Eastern Coast. It costs a lot of money. So you want to rely on partners. And Jay just told us how great it is to work with partners. Most of the economy is run through partners, but we have to do it in a clever way. Please keep in mind that selling a new product is not an easy task, okay? It's hard to sell new products and new concepts. And also, again, keep in mind that your partners have different interests. They're not willing to take the same risks that you are. And you really need to respect that, okay? You cannot change it. This is the type of business that they're running. And you need to tell them how to sell your products. You need to have some hands-on experience with direct sales. You cannot avoid it. But if I haven't convinced you, let's look at it from another perspective. I'm not sure if you're familiar with it, but there is a model developed by Geoffrey Moore, Crossing the Chasm, which classifies customers according to their buying habits or their willingness to adopt new technologies. So on the left-hand side, you will see the innovators that are really very curious people, technologically oriented. They want to play and experience with new tools. They want to have a really big advantage or a competitive advantage. Then these are followed by the visionaries. The visionaries are the early adopters. They're also willing to take risks. They want to, be ahead of the curve. And they are willing to take risks of buying a product from a small company, like most of you guys probably. But then when you want to penetrate to the main market, okay, to the mainstream market, you come across first the pragmatists, which is called the early majority. And these pragmatists are driven by a sense of practicality. They're very practical. They're skeptical. They know that most of the new products fail and new vendors fail. They don't want to take this risk. They want others to experience the products before they do. Okay, so they're very risk averse, but there are many of them over here. Okay, and then we have the conservatives, which is quite similar, but they will always prefer tradition over progress. They will adopt new products only at the end of the technological life cycle. So when you penetrate to a new market with a new concept, you need to have a team that is selling to these guys, to the early adopters, to the innovators. And for this, you need a team of both technical people and passionate people, okay? Capable of selling concepts, evolving products, technologies. Channels are not the best position to address this need, okay? It's your role, it's your duty to do that. But then what happens is when you come to the main markets, these are more conservative. They will feel more comfortable to buying from companies that are their vendors, that they have a relationship with, those that can provide a full product with completing products, with support, with integrations, with training. This is the place where partners come very, very handy. Actually, you will need them to cross this chasm from the early adopter to the majority of the market. This is where partners have a very important role, and this is where they occupy this 75% of the market probably. So what I can advise to you is that you need to start directly. You need the experience to share with your partners, and you need to establish your references, okay? Then once that you do it, more partners will be able to join you and then sell it to the mainstream market. So partners are great for scaling your business, okay? But you should be doing the initial work with the initial sales. So keep that in mind. We'll go through this fastly, and actually, as a matter of fact, we're talking here about choosing partners hastily. Don't trust too much. Don't be too flattered by the first partner that agrees to work with you, because you're going to pay a very big bill at the end of the day or the year or the partnership. So you need to carefully assess who your partners are, who comprises their customer base, what size of companies do they sell to which industries, to which personas. So maybe they sell to IT teams in higher educations, but you're addressing also higher education, but the marketing teams. Is there a good alignment? What is their business strategy? What will they benefit from working with you? Okay, you should run a systematic process of analyzing them. Otherwise, you're going to meet a poor partner selection, and it's going to fail. So my tip would be to run an evaluation process. What you need to check with the partners. Don't rush and sign with the first one. And you need in your team somebody experienced enough to assess partners and tell the ones that are not, let's say, too promising, maybe opt not to work for them at this stage. This is a delicate issue of pricing, okay? So what I've been seeing is that typically the more successful companies are those that have control over their pricing. But many companies want to fully outsource their pricing to their partners. Now, Jay brought into my attention that in some markets, this is actually legally binding, that the dealer or the reseller is the one that should decide the price. So you should find a way and somehow maintain and set a certain control over pricing. Why? Pricing is part of your strategy, okay? We saw the 4 Ps. You cannot fully outsource them. So you should guide your partners about the end user price list, okay? That should be somewhere aligned to the prices that you're selling, okay? Pending the legal limitations that you have in your respective markets. Now, I've seen that many tech companies, they think that their partners know what is the right price, but this is not the case. In the majority of the cases, your partner will ask you what is the right price, because they're not necessarily expert in buying, in selling the same product. They may be in the case that they are selling a competing product. That's another case. So you should be minding about controlling as much as you can the pricing, because it's part of your strategy. My suggestion would be to run a market research, see what are your competitors' pricing, define a pricing model, an end price list document, and at least share it, even if you cannot oblige your partners to sell according to this end user price list. Share it with them, because you're also sharing here your wise advice, what should be the target price for the customers, for the end customers. So don't undermine pricing, and don't think that your partners will do the entire job for you. It's part of the relationship that you need to work with them, and the guidance that you need to provide. And again, this is why the reason why you should experience with some direct selling, okay? So that you know what are the delicate points or the thresholds according to which you can define your pricing model and the actual prices. Lika, can you pull up our next poll? So we want to ask you guys about reporting. Have you thought about, should your partners be reporting to you? How do they report to you? Maybe they don't report at all. Maybe they're reporting to you by their own CRM. Maybe do you enable them to use your CRM? Maybe they just provide reports on Excel, or maybe you have a PRM, a partner relationship management system. Let's see as the results are coming up. Interesting. Don't think that's a bad practice to report in Excel. It depends on the number of partners that you have, okay? But yeah, I think we can end the poll, Lika. We can close it. So reporting is an issue. Let's see what are the results. Yeah, so most of you, almost 50% partners don't report to you. As a matter of fact, they don't have to. In particular, because they're independent business and because probably you haven't asked it in advance, okay? Some do it on Excel, CRMs, and a PRM. PRM is like a CRM, but dedicated for partner relationship, partner relationship management. And the reason that I've asked this question is because of the last mistake, which deals with the lack of channel partner program. So there are many issues with missed expectations with partners, okay? So some of them don't share the plans with you. Some do not report, so you don't have an idea what are they doing. Are they actively selling their products? Are they developing a pipeline? A lot of missed expectation. And this is because the lack of preparing a channel partner program, even a simple one. So a channel partner program is not a legal document that will have in your partner or reseller agreement, but it's a document that establishes the framework of the relationship. Before you marry with somebody, you need to define what are the rules and expectations. So it could be a document that could range from 4 pages to 15 pages, okay? But there are no rules with regard to that. where you should define the partner types that you're looking for, because it's also meant to attract new partners. So you want to show them how they can make money, okay? The roles and responsibilities. For example, we see over here several scope and activities that the partner can do. Referrals, co-selling could be, marketing, sales. There are different activities that are required in order to provide a full product, a full solution to your customers. And you have to define for each program or for each partner time, are they in a position to undertake this role? Okay, so this is why you need to define roles and responsibilities. Don't assume that they will be doing everything for you. You need to expose all the functions and roles and see what they can do and what they're not in a position to do. You need to define the commissions. You need to decide what are the incentives. Jay also implied on it. Are you going to incentivize only sales or also behavior? For example, maybe you would like to incentivize POCs or product demos to support your future to be partners. Which other benefits are you going to provide them? You need to be attractive. You're competing with other vendors, even if they're not your competitors, over the attention of the partners. Will you be sharing with them leads? Will you be allowing a deal registration? Will you be listing them on their website? Will you issue a press release? Co-marketing, a lot of benefits that you can provide them. You should put it in a written document so that they will acknowledge it and know that you're trying to build a win-win relationship. But you also need to indicate what are your requirements. Do you need a focal point of contact? Do you need reporting? Are you asking for a marketing plan from your partners? This is a tough mission, but if you haven't set this expectation, why should they share a marketing plan with you? Nobody likes to prepare marketing plans. So my tip here would be to prepare a channel partner program in advance. This way you will be able to attract the most experienced, the stronger partners, okay? They will evaluate you on the maturity of your partner program. If you don't have a program, you just mentioned, yeah, we pay 25% commission and we will support you with the demo, that's not a good answer. You need to show your partner that you are partner oriented, that you have adopted a channel first strategy. And then you'll be able to attract the better partners and avoid mis-expectation, because we don't want to ruin relationship. If it's not meant for a marriage, let's not marry, okay? And then don't hope for a miracle and that eventually there will be like a accidental alignment of expectations. You need to tell them what they want. They will tell you what they can provide, and this way you can build true partnerships. These are my 7 mistakes that I took note of. Those of you that want to book a free consultation, maybe Lika, maybe you can copy paste the links into the chat if you can. Those of you that want to book a free consultation, you can do it. You can also be interviewed to our Beam Global's Fireside Chat series, where CEOs share experiences of breaking into new markets, or you can just register to our meetup groups so that you will get notifications of future events. Do we have any questions that we'd like to answer?
We have a question. Do you suggest to limit a minimum or price list? That is the question from Sigaya.
The minimum what, sorry?
Do you suggest to limit a minimum or price list?
Yeah, look, I would first of all suggest to have a price list. Many of you guys don't have a price list, okay? Sometimes it's based on a case-by-case study. You need to have a price list and share it with your partners. Now, maybe the legal laws in your respective market will allow the partners, legally speaking, to sell it in whatever price they want. But you need to guide them. What is the right price? What is the right price for the end customer, okay? And I suggest, as long as it's possible, whatever the right price is, that you share the revenues with the end customer. So if you decide on a 70-30% discount and commissions with your partners, so don't let the partner bear the discount from his commission. Share the end user price list with your partner. So instead of selling $100, you will sell it after a discount for $90. Share the $90 with a 70 and 30%. I see a question about the number of partners in a territory or several ones. This is an excellent question. So first of all, we don't want nowadays to give exclusivity to anybody, but it depends also on the type of products and customers that you have and the type of market. If in a certain market you have a potential, let's say that you're selling to big banks, this is your market, and you're selling in Greece. I haven't checked this, but let's imagine that in Greece you have 10 big banks. Probably that would be okay to have one partner to work with. But if you have 100 or 200 potential customers, you don't necessarily want to rely on one partner, okay? Or imagine big territories like the US or Brazil, okay? You need also territorial coverage. So maybe you can have 3 partners, one covering the eastern part or one covering the western part, one covering higher education and the other one covering retail. Depends on your products.
Right. So if you have still some questions, please write in a chat tab or in Q&A session. Otherwise, we can move to another raffle. What do you think, Ori?
Yeah, if there are no other questions, if still something will pop up, we can always address it or take it offline. But let's see what you what have you prepared for us, Lika?
Yes, for now we have a SendBuzz marketing automation account as a gift. So this account is used for cold email campaigns. It has 3 months membership, includes 100 free leads valued at $591 USD. So this is very important gift, and it really gives the real value. Straight away, they can already use the email for the cold email campaigns, because SendBuzz generates leads and engages with them on email, text, and calls using a single AI-powered platform. So SendBuzz is an all-in-one marketing automation platform that helps you run inbound and outbound marketing campaigns. You get a platform account with full access to run a 3-month campaign. So I think it's a really great gift for the people who stayed with us until now. And we can start now the raffle to see the winner. We are going to have only one winner for this, but after this raffle, actually, when the webinar will be closed and we will have a survey, we have another raffle for the people who answer the survey, the questions, not be live, and we will share to our attendees who is the winner of the Amazon gift card of $50 value. That will be happening after the event. So right now, let's move to the SendBuzz marketing automation account. Who takes it home? Let's see. Okay. For some reason, the sound is still not working, unfortunately. But we have the winner. So we have Brenda Akers, a winner. Ori,
Lika, can I interrupt you, because I see another question that I don't want to leave Asaf with this important question, so sorry for interrupting. Asaf is asking, how do I find partners? So Jay in his presentation implied to numerous channels. I can share some of mine. Sometimes you can ask an existing customers who could be a good channel if you have in the respective territory. Events, there are channel events. Okay, events that are meant to partner vendors to channels. Sometimes you can ask ecosystems, as Jay indicated before. End user marketing. If you will be doing a good end user marketing, you will also find partners. And sometimes some of your existing partner companies, for example, suppliers, or platforms that you work with, can introduce you to their partners. So there are a lot of ways to find partners, but first prepare a channel partner program. That would be my advice. Lika, please,
yes,
you can move forward.
We have the Brenda that is thanking us for the gift. And so I again remind the people that the webinar has been recorded and it will be shared with participants. We also conduct another raffle post event for $50 Amazon gift card for those who complete the survey. The survey will pop up once the event is finished. So once you close the event, it will pop up in your browser automatically. You don't need to do anything. So thank you for joining us. It was indeed a pleasure to be with you. And yes, thank you for Ori. Thank you for making this happen.
Thank you, everybody, for attending from all over the world. Thank you, Lika and Jay, and the great audience. I hope that you benefited from this. You can keep sending us questions via the off-webinar channels, and we'll be very happy to address them. Take care and good luck in your channel first strategy. Bye-bye.